What's up, guys, and thanks for tuning back into Token Metrics TV. This is Crypto Foresights, and I'm your host, Forrest Pribish, Senior Cryptocurrency Investment Analyst over here at Token Metrics. Guys, it's been a dicey market. It's been a rough couple days. It's been a rough couple weeks. Bitcoin has fallen quite a bit. Today, we're looking at Bitcoin, and we're going to use Bitcoin, or we're going to continue to use Bitcoin as a proxy for the rest of the market. What I mean by that is basically this entire market is kind of reacting to Bitcoin. Now, the problem with Bitcoin right now is, well, a couple things. We're kind of in a macroeconomic situation that is driving a lot of asset prices down. Recently, we have the stock market, the legacy market coming down after the Fed has kind of acknowledged this inflation issue and potentially is going to increase interest rates in the future, right? We don't have anything set in stone yet, but regardless, the equity market is not doing really well right now. On top of that, we have these kind of FUD narratives on top of Bitcoin. But ultimately, what is happening and what has been happening for the last, and I'm just going to measure this consolidation period that we've kind of been in for the last 33 days, is there's just been an all-out war between the bulls and the bears, right? As an analyst, it's been very difficult to pick one thing or the other, right? The question everybody's been asking after this dip is it a bull market? Is it a bear market? Well, it's undecided at this point. This is kind of what I've been saying for the last 33 days, right? Ultimately, we need to retest, right? We need to come up and retest this downtrend line. And before we do that, we really don't know whether or not we're going to be in a bull market or a bear market, because that's kind of the decision phase that we're in right now. We're consolidating, and believe it or not, we're actually getting more volatile, right? We're seeing expanding volatility where we actually made a higher high, but now we've made a lower low, right? So the market, that increasing volatility is a big indicator of a lack of confidence or a lack of decision of what direction this market's actually going to go in, right? So we've got all of this increasing volatility, and it is just an absolute all-out war because we have people that are completely split, and even analysts are split on what direction this market is going in. A lot of analysts are saying, we're still gonna 100 to 300K still on the table. We're still going up. This is still a bull market. This is a correction. We're just gonna see something like we saw maybe back in 2013. If I go over here, where we saw this double peak, right? And that's the case that we're going to see. And you also have the bears that are sitting here and saying, no, we're going into a bear market. This is over. We're coming down to 20K, maybe even 15K, 12K, whatever. I'm somewhere in between. I think it's absolutely possible that we go back into a bull market, and it's absolutely possible that we go into a bear market. Now, that might sound like I'm talking about out of both sides of my mouth, and it's because that's what I think the smartest thing to do is right now. I think the smartest thing to do right now is managing our portfolio to make money regardless of what happens, and having a strategic plan and being ready for both scenarios. Because at the end of the day, this is an absolute war. Like we know that the bulls and the bears are fighting it out. We see the increasing volatility, right? We make a higher high, then we make a lower low, right? Traditionally, expanding triangles, expanding volatility are reversal patterns. But again, that doesn't mean that in the short term, the bears can't win and send us down to 20K, right? This is a possibility that I've been talking about for a while, of maybe before we retest, we do take a trip down to 20 or 25K, and then we see a V-shaped recovery before we go up for our retest on this downtrend line. So the idea here for me, and the way that I'm managing my portfolio, is being prepared for multiple scenarios. And what does that actually look like? Well, if you're preparing for multiple scenarios, you may have to either take on some additional risk or start using or exploring some different tools, right, for making money in this market, right? If all you're doing is spot buying and spot selling, your hands are kind of tied in terms of making money on the way down. So if you tuned in, I believe last week or the week before to Token Metrics TV, I was talking about shorting this year, right? The reason that shorting up here was such a good opportunity and has worked out was because we had this downtrend line getting developed. And I'll put that other line back in just a second. But we had this downtrend line that we ended up breaking through, and we knew that whenever we break through a downtrend line, we almost always have to come back and test for the confirmation bounce, right? We actually failed this test and fell through lower. So getting a short in here now has put us in an amazing situation to where if the market does fall through, we have a short in at the local top, right? And we're not only have we already made, if you've been shorting this, you've made a ton of money on this move, right? Maybe maybe the Bitcoin does bounce back and go retest, and then we get kind of stopped out wherever we want to close our short trade, probably somewhere here on the retest of this downtrend line if we do go back upwards, right? But if the market does fall through, now we have a short position in where we're making money and offsetting losses from our portfolio, right? Our core portfolio, just through this short position here, that we can make a lot of money on this trip down, or potential trip down to 25, all the way down to maybe 20K. If we do see that again, I think we would see a V-shaped recovery followed by a retest of our downtrend line, guys. We do have a lot, and I mean a lot of buyers sitting under 30K, right? Bitcoin took a trip earlier this morning down to 28.6K, I believe, 28,600. Look at this bounce and look at this wick that we've seen so far, right? And look at these wicks in the past. Ever since we've crossed through 30K, we've got all of this buying pressure, which I've highlighted in this green box here, right? Now, back to kind of the line that I was showing earlier. And don't get too focused on, actually, looking at this as a trend line. I'm trying to draw it in parallel to our downtrend line here, right? Because what do we think is going to happen? We think, based on history, right? Based on history of, whenever there's a market crash, Bitcoin ultimately comes up and retests for a third point, right? It might go through and get a confirmation bounce. It might go through and fail the confirmation, or it might just get rejected up front, right? The smart thing to do, in my opinion, is to sell that confirmation or that retest. But in the meantime, and why I've been such a big fan of buying this dip. And you might be out of capital to buy this dip, right? But at minimum, you could probably be DCAing in with whatever monthly income. And again, this is not financial advice. This is what I've been doing. I've been continuing to DCA into these wicks. And I've been DCAing into altcoins, not Bitcoin. Remember, we're using Bitcoin as a proxy for the rest of the market. But we know we've got all of this buying pressure here. And we do know, yes, we could go lower, right? But remember, we have our short in there to take care of that situation, right? And we can continue to average in down here if we do take a trip down there, down to 20 to 24K, 25K, right? But the reason that I averaged into the market earlier today on this wick down here is that if Bitcoin retests, and we know that we expect it to, right? And we're buying all of these wicks, right? We're buying all of these flash crashes. We know that as long as, and I've drawn this horizontal line here that I'm going to actually highlight in pink, just so you know which one I'm talking about. We know that as long as Bitcoin, whatever we purchase below this line, right? Below this line, and I'll even move it up here. Let's be a little bit more generous. Let's just call it 32K or so, right? Anything we buy on these wicks down here, we can turn around and sell for a profit more than likely on this retest, right? Up here, right? And as long as Bitcoin retests, we don't know exactly when it's going to retest, right? Maybe we bounce and then come up and retest. But as long as it retests before the 20th of November, right? The cross section of where we're actually buying now and what this retest would potentially look like, right? I'll just draw this scenario here. We're making a profit. We're turning around. Even if we go down to 20K in the short term, right? as long as we come back up and retest this downtrend line, which we think is going to happen because historically it happens every single time that Bitcoin crashes. Usually it happens within 90 days. We're currently at about 70 days, I believe, since our all-time high, right? We can turn around and sell everything we're buying now on these wicks for a profit. Now, maybe Bitcoin does, take a really long time to retest, right? Because ultimately it does have to. Unless Bitcoin's going to zero, it does actually have to, believe it or not, retest this line, right? Because imagine this scenario where it just keeps going down and never retests. Well, now all of a sudden, by September of 2022, we're below 10,000 again, right? We're eventually Bitcoin is going to continue to run into this line and retest. By buying these wicks here, we're just betting that it's going to retest within a couple of months because that's what it's done historically, right? So I'm a big fan of buying these wicks here, and I'm a big fan of using that as a way to make money even in this potential bear market crash scenario, right? And we can look at historically these Bitcoin crashes where eventually Bitcoin does retest, and selling these retests are a great way to make additional money in this market or in a nasty market with very low risk, right? Because look at this situation. If you sold this retest here, right, you could have gotten in lower, right? And then you could have sold this retest. Well, in this case, it broke through. And then you just buy the confirmation bounce lower than what you initially got in. And you can see this pattern emerge over and over and over again, right? In this case, in June of 2019, summer of 2019, it took roughly 41 days to actually retest, right? And if I tighten this up, you can see, right? If you sold this retest, that was the best time to get out, right? That was the best time to get out. I'm going to take a measured move here from the top. And if you sold this retest at this downtrend line, you got out at just 14% below the local high. That is not bad at all. You're selling within 14% of the local high. If we go back over to the big crash of 2017 and 2018, right? We can take a measured move in terms of date and see that it took 78 days from the all-time high to retest here. And if you sold this retest, you're getting out, I believe, 40% under previous all-time high, 40 to 41% under. That's a lot better than selling 70%, right? If we go, to the absolute bottom here, right? And if you panic sold any of this space here, you're getting out at potentially one of the worst times. Instead, if we're patient and we wait for the retest and we sell the retest, we can rebuy in much lower and stack more crypto, right? Because at the end of the day, you want to either be making money, making dollars, or making crypto. In my opinion, because crypto is the future, I want to stack as much crypto as possible. So the other thing I want to draw to your attention is this white line here, this white dashed line, right? And basically, all I'm showing is some level of distance between this downtrend line. And I know that's getting a little bit cluttered, right? There's essentially this white dashed line is equidistant at any given point from the downtrend blue line, right? So the further away the current price gets, and ultimately, guys, like we said, the assumption here is that Bitcoin's going to retest this line eventually, sooner rather than later. The further the current price is away from this line, to me, the better the current deal is, right? So buying here at the bottom of this wick, when it's a very long distance, very undervalued against this downtrend line, then that's absolutely a great point, a great purchasing point, right? Because the distance is great, and we know that Bitcoin's potentially undervalued against where it's going to retest. The same thing can be said here. This is actually where we shorted, right? We put in a short here for other reasons because we had this downtrend line and we knew we were needing to come and look for a confirmation bounce. But look how close this was to our downtrend line, right? The associated risk is much higher buying when we're closer to this line. The potential gains to turn around and sell the retest are not nearly as high, right? Now, on this wick earlier, we got very far away from this downtrend line, right? So buying here makes sense because there's a lot of gains to be made if we go back up to this downtrend line. And I'm not saying it's going to happen in this straight line here, right? That, like, I'm not saying that this is the exact path that we're going to take to the retest or a downtrend line. But what you can do is use this as a measurement of how far away or undervalued are we against this downtrend line, right? And you can look at it in terms of distance, straight as far as like a parallel line to the downtrend line, like we just did. Or, of course, you can just measure it. If we take our measurement tool here, you can also just measure from our downtrend line to wherever we're wicking down to. 47% undervalued, right? In that case, earlier today, it looks like we were about 44% undervalued against our downtrend line, right? 44.5%. To me, that is undervalued, right? Because we know that this line, this downtrend line, is ultimately going to act as a magnet that pulls the price back up to it sooner rather than later, right? We might come down here first and get a V-shaped recovery. Again, we got our short in to take care of that situation, but eventually we're coming up to this line to retest. So the further away from this downtrend line we are, the higher incentive there is to actually to buy, right? So when we get 44% plus, or really even, 40% plus away, undervalued against this downtrend line, I'm highly incentivized to buy because I know there's a very good chance that I can turn around and sell on this downtrend line. So I hope that didn't get too long-winded, and I hope that makes sense the way that I'm thinking about this market. One thing that I would say, and again, this is not financial advice, in these kind of dicey times where we are in an all-out war, right? And we could be going into a bear market, we could be going back into a bull market, but as long as there's risk of us going into a bear market, again, not financial advice, but me personally, I am staying away from more speculative investments, right? I want to make sure that I'm in absolutely solid projects that will bounce back in future cycles, in future bull markets, right? I don't want to be in low cap stuff that can just get beat to death in a bear market and get beat down to zero. I want to be in the cream of the crop. I want to be in absolutely solid long term projects that have good code reviews and good fundamental scores. So make sure to tune in on Thursdays for more hidden gems where we try to find those projects, but also pay attention to the code review scores and the quality scores of these projects. Make sure, again, not financial advice, but make sure you're staying in high quality projects when there's risk of a bear market. I hope this video was helpful. Thanks for tuning in, and tune back in every Tuesday for more Crypto Foresights. I'm your host, Forrest Pribish, Senior Cryptocurrency Investment Analyst at Token Metrics. See you next time. Bye.